Everybody, my name's Simon. I'm the Chief Economist for the EIU. Fantastic to be with you today in Hyderabad to share with you what we at the EIU see coming over the next decade, what we think some of the key trends that are going to be shaping the global economy, the global political environment, and importantly, the tech sector. There's a lot of people crowded right down the back. I guess it's pretty scary. Those of us on stage are pretty scary. But you get a better view of my beautiful slides if you come further. So maybe you've got Hawkeyes down the back, and that's the place to be. But feel free to move as you see the presentation. Let me start with 5 key trends that I think are really important to think about for the decade ahead. And we are really at a turning point in the global economic and political environment. The world is an incredibly different place now to what it was like in 2019. A lot of it is about coronavirus and the war in Ukraine, but not only those factors. We've seen some systemic changes in risk tolerance of firms, in supply chains, and particularly in the role of China in the global economy. And the world is now going to be very different. Some key trends that are coming along. One is localized supply chains, the moves amongst chief supply chain officers to shorten supply chains, be a bit more worried about resilience when they're doing their supply chain optimization, wanting to have multiple sources of where things are from, wanting to run through different scenarios of potential disruptions. And there are some opportunities there for tech as well as other sectors to be part of this increased focus on resilience. For whom are you or your product the solution that might increase the resilience within their supply chain or help them to get the insights to be able to better track risk and opportunity along their supply chains. The second one is commodities are now very back at the center of the global economy, which has not been the case for a while. They've kind of long been, I guess, literally commoditized products that have not been very interesting and have not taken a central part in policy making. Now, with very high food prices, very high energy prices, commodities are back at the center of the economic action. Third key trend is around the green transition, and this is going to be a huge reallocation of capital around the world, and tech is going to have to play a role in that. And we know that the world is nowhere near on the trajectory to where it needs to be to avoid dangerous climate change or to meet the warming targets of the ICCC, and that includes India, where we are here today, very far behind where it needs to be, as are many other countries. The consequence of that, huge capital reallocation is going to be needed, huge investments are going to be needed. And what's the role of tech in helping to drive that change and make that change less costly to deliver? Fourth key trend is the weaponization of business. Business would love to be separate from geopolitics. You talk to companies and they'll say, oh, we have great relations with China, we have great relations with the US, we do business everywhere, no problem. If the politicians don't get on, doesn't affect us. That's a nice wish. Unfortunately, the protagonists or the politicians involved don't want you to not be involved. And business is getting drawn in to geopolitics, like it or not, even in previously kind of uncontroversial sectors. Think about textiles and garments. Couldn't get more boring industry than making t-shirts, but with the supply chains running through Western China and the concerns around use of forced labor in Xinjiang and that area is a big cotton producer, and actually linking to the previous trend, a big solar panel producer as well. Firms were essentially faced with a choice, sell in China or sell in Europe, but it's very hard to do both out of the same supply chain, even though t-shirt makers did not really want part of geopolitics. So what does that mean for you in this audience? You're obviously in a range of different industries and business models within the tech sector. Think about all of the important bilateral relationships that you've got to run your products through, your supply chains, your customers. Where are the potential geopolitical ructions that could get in your supply chain, and where you might be a business that the relevant governments want to make a point of or want to use as a lever in their international competition. And then finally, just specifying in on tech, tech is intensely geopolitical itself now. Tech is not just an industry, it's also everything. Every sector is being digitized, every sector is having a digital transformation. And countries know that the people who control the technologies of the future are going to control the geopolitics of the future. And so there's a lot of political concern around technology. Think back a few years to what happened to Huawei and how it essentially its whole telecoms carrier business was destroyed by the fact that it was pushed out of all of the most profitable markets. It's now had to reorient itself into green, and they're trying to get into green technology and a bit more into consumer technology, but a huge shift in what that company is doing, completely driven by geopolitics. And tech is going to, for the next few decades, be right in the middle of that. So they're the 5 key trends that I'm really thinking about for the decade ahead. Let's dive into how the global economy is looking in different markets. These are our EIU forecasts about growth in different countries, what we think is going to happen. If I was talking to you in February, it would have been a much more optimistic presentation before the war in Ukraine and the uptick in inflation and all of the commodity shortages that we have seen. Before that, growth, though, we were forecasting at the EIU was going to be just a tiny bit under 4% this year. That's a pretty good outcome. Would have taken the economy well beyond where it was pre-coronavirus, so recovered all of the losses from COVID and then a little bit more. Would have been a pretty good year. But you can see we've since slashed our growth forecasts down from 3.9 to 2.7 in a global perspective. This is largely driven by the war in Ukraine. So countries here are coloured by their expected growth rate for this year. The red countries growing faster. I'd be happy to see India there in one of the redder colours around the place. The fastest growing big economy reclaimed that title of China. And countries in blue and purple are growing the slowest. So there's a massive purple blob around Russia and Ukraine, both having very deep recessions this year. The main spillover of the war has been into Europe and the big increase in energy costs and the huge levels of inflation in the Eurozone, reducing consumer spending power. So the Eurozone has had a very big downgrade as well. The other factor that's really come along, and unfortunately it's very independent, and so we've kind of got, in each of the 3 big regions of the world, US, Europe, and China, we have a separate crisis kind of dragging growth down. Usually you'd hope one area has a crisis, another area is doing better, and is sort of making up some of the lost ground. But we've got the Ukraine war and the energy crisis hitting Europe. We have China. Look how unread the China hexagon is there. It's in the sort of 7 or 8 years I've been making this chart and updating it every month. China has never been that far down the leaderboard. It's never been that color before, and that's because of its zero COVID approach. Yeah, so the ongoing lockdowns around that. China's growth this year is going to be 4%. We think that's a really unheard of number for China, except for the COVID year 2020 when it grew by 2%. It's not growing any faster. I mean, look at some other countries that are kind of a similar color. It's not really growing any faster than Poland or the UK, right? And this is China that we're used to seeing at the very top of the growth leaderboard. So in Asia, the economy is being dragged down by that zero COVID policy in China, then the war in Ukraine, and then over in the US, we have the Fed trying to balance its interest rate decisions and come down off the very big fiscal stimulus that the US did post-COVID. So that's the global growth picture. There are some bright spots, and a lot of those are in Asia. And a second key set of growth hotspots are, of course, commodity, especially energy exporters. So in Asia, we see some of the supply chain reallocation beneficiaries, so places like Vietnam, are getting a lot of investment moving out of southern China. We have the Philippines, a really strong labor market, a good skilled workforce, good supply of workers. Same for India, so a lot of jobs moving into those economies. Bangladesh, Cambodia also getting some manufacturing moving out from China, and then a lot of red around the Middle East, and then amongst commodity exporters like Indonesia and Malaysia that are benefiting from those higher prices. That's how the economy is looking right now. What are some of the risks that are on our agenda? These are the EIU's top 10 risks for the kind of 12, 18 months ahead, kind of coloured by kind of style. So we've got deteriorating ties between China and the US and the EU, force a full decoupling. of supply chains. And this is an important one for tech. On one hand, it's going to mean probably a lot of extra investment because a lot of companies are going to have to run dual IT systems. Yep. So one for the US and associated countries and one for China and associated countries. And both jurisdictions are not going to want data flowing between them, so that's kind of a business opportunity and also an opportunity for not just the scale of investment, but to think about how your products might be able to separate out across these two kind of tech worlds that are happening or facilitate companies doing that. But it is going to mean less efficiency because there'll be, there's economies of scale to data, there'll be a lot of duplication. And so investment is going to be going not necessarily into things that are increasing productivity, but into improving geopolitical resilience. We're worried about monetary tightening in the US. The thing that might lead to a recession is if the Fed raises interest rates by too much. COVID has still not gone away, where there are new variants all the time. To date, the variants have not had the combination of being able to escape the vaccines and being very transmissible and being very dangerous. So we've kind of been lucky with the mutations so far. Who knows how the virus will mutate over the next year? For sure it will. It's just a question about what is that going to look like? And so there's very likely to be further large waves of COVID, and so countries will need to be prepared for that. And then another tech-related one here in red, we have a cyber war erupting as one of our top 10 global risks as well. Is there going to be a recession? This is kind of the question on the lips of the financial press everywhere. I think at the EIU, we are probably a little bit more optimistic than average. I think a global recession feels pretty unlikely at this point. I mean, even though we've downgraded growth a lot this year, from 3.9 down to 2.7%, it's still a fair way off zero. Yeah, and so it would take a lot of reduction from that to get us into negative growth, and especially when we remember in 2021, a lot of places, including India, spent significant parts of 2021 in some form of lockdown or under COVID restrictions. So just that natural reopening process is going to stop economy shrinking on a year-on-year basis. 2023, there are higher risks. I mean, we do expect some countries are going to have recessions. So Germany, Italy, Turkey, and Russia are all countries that we think will have recessions this year. There are recessions out there. The US, though, probably not one of them, and I think certainly not the world as a whole. What might cause a recession? One is more supply shocks, and these would have to be additional to what we've already had. So we had these big supply shocks from Russia, Ukraine, or the Russian oil coming off the market, and then restrictions of availability of wheat and metals and all these sorts of things. That's already happened, and we've seen the inflationary impacts of that. Everybody's trying to adjust. So there'd have to be another kind of set of shocks. So say, for example, Russia deciding to just halt all energy sales to Europe, for example. It's potentially that could happen. Something like that, a further supply shock could send us into recession. By the mechanism of higher inflation. Also, if the US Fed raises interest rates by too much, that would also be another thing. Now, that would be a bit of a self-inflicted wound. The US Fed is very awake to that risk, so it's not walking into it blind, but it's very hard to get that right, and there's a lot of uncertainty about how to balance it. So it's worth thinking about recession risks, even though on balance, I think we're not going to see one at the global level. Looking out to 2050, we should remember that this region, especially APAC, has got a lot of future growth coming in it. And while growth prospects have been hindered by COVID-19 and are being hindered by the changes in supply chains and the changes in geopolitics and the US-China tensions playing out especially in this region, by 2050, there'll be a lot of the top 20 economies in APAC. So here on the left, this is sort of the 20 biggest economies of today. So US and China at the front, India there in sixth place. Now in 2050, things are looking a bit different. We have China at the top. It's probably going to overtake the US in the early 2030s, 2032 or something like that. and by 2050 it will be well ahead. India will then be in third place, a long way ahead of fourth placed Germany, but there's a lot more APAC countries moving further up. So Indonesia moves up ahead of Japan. We see places like South Korea and Australia staying there, but entering the top 20 in 2050, Vietnam and Bangladesh are two new economies. Now, they're going to be big, but they're not going to be rich. And even China in 2050 will be less than half as rich per person as the US. So they'll be big economies, but they're not all going to be wealthy. It's going to get a bit harder for Asia to achieve the very fast growth that it's had over the past 15 years. And we're going to see greater reflection in Asia's growth rates of the quality of policy making, and governments are not going to be able to avoid some of the tough decisions that they have avoided in the past. So in Asia, nationalism is very strong across all sorts of different places. So you see governments generally kind of cave into domestic interest groups quite a lot, even if it's at the expense of longer term benefits. That's been fine for the last 15 years or 20 years by and large, because China's grown so fast that your exports to China just go up by 20% every year just without thinking about it. And so that's been a nice little bit of extra help. The inexorable movement out of supply chains, Western boardrooms just wanting to put everything into a lower cost jurisdiction, be that manufacturing, into Vietnam, or services into a place like India. That's driven huge amounts of investment. And the very low interest rates after 2009 means that capital has been not worried about risk, looking for any kind of return. The panel beforehand, they talked a bit about valuations and startups and funding rounds and whatnot. One consequence of this new era of higher interest rates is that there's less stupid money chasing loss-making companies, with the promise of profits in 15 years or something. Well, when interest rates are zero, as long as I think your idea might be better than zero, then I'm likely to invest in it. But now with interest rates of 3 or 4%, well, I can put my money in very safe US bonds and get a 3 or 4% return. Well, maybe I'm less interested in your loss-making startup for the moment. And so there'll be a lot more, I think, scrutiny of business plans. And I guess in a sense, what we've seen in the crypto markets is an extreme example of that. So there's something that's kind of got no business model behind it, right? It's all about speculation and chasing potential returns. And the big declines we've seen, down 50-60% on the start of the year. It's not going to be as strong in the startup scene, because there is something behind startups, of course, and there's something behind new technologies. There are going to be future sales and future profits, but investors are going to be caring a lot more about that. So in Asia, it's going to get a lot more difficult, because all of those three supports have been taken away. We're going to have higher interest rates. We've got supply chains kind of pausing, that movement out of supply chains, more worries about risk. And we've got geopolitics playing into that as well, adding a risk premium into many emerging markets. And then we've got a permanent slowdown in China's growth. China's at 4% this year. It is never going to get back to 7% again. It might have a bounce back next year off the low numbers of this year, but if we take a medium-term view, China's growing below 5% from now on. So the days of China's economy saving us every year are coming to a close. I'm going to try and finish up in 5 minutes, so I've got some time for questions. So we'll only have time for probably 2 or 3, so whoever the least shy people that pull their hands up when I get to the end will get the chance to have a go. So have a think ahead if you want to ask something or present a perspective. What does the war in Ukraine mean for geopolitics in Asia and in the world? Here's our map that we made at the EIU of how we think different countries line up on this crisis, whether they're supporting the West or taking the Western kind of perspective, or whether they're taking a more Russia-leading perspective. Of course, this has a lot of overlap if you did this for Western perspective and Chinese perspective as well. If we now do have the kind of very obvious coalition of China and Russia as one kind of geopolitical bloc, and then a Western-led bloc as well. A lot of the message from this map is that, well, if we think about it in terms of GDP or like the size of the world economy, of course, almost all of that is in the Western-led bloc. So it's obviously Europe, US, Japan, South Korea, Singapore, Australia, all those sorts of countries. If we look at it by population, of course, there's a lot more kind of leaning towards the US or Russia. I mean, China has the world's biggest population. India will overtake it over the next maybe 5 years or so. India's an interesting example. It's kind of there in the middle color. It's kind of neutral. It's one of the geopolitical prizes at the moment. Everybody would like India to end up on their side. India is trying to avoid choosing, which most countries do try and avoid choosing, play both sides off for as long as you can. Eventually, that becomes not possible, but countries will try and do it for as long as they can get away with it. What does this mean for tech? It does mean that when bilateral relations deteriorate, tech is very strategic now in the minds of policymakers. They're going to be thinking about what data is going where, who's got access to what, and what are our vulnerabilities in the tech supply chain. Russia's had a massive vulnerability in the tech supply chain now that is cut off from semiconductor exports from Taiwan and from South Korea and from Japan. So its firms are not able to get access to the capital that they need, the actual physical components that they need. China saw that with Huawei, and they're working very hard to try and establish their own independent semiconductor capacity. I mean, they're a long way behind where Taiwan is and even where South Korea and Japan are, but there's huge amounts of money going into it, and everybody is trying to make themselves more resilient to disruptions in their tech supply chains. I talked already about China's growth slowing because of the zero COVID, also demographic decline and the return of emphasis on state-owned enterprises. Here's where we think supply chains might go. So we've sort of ranked here a bunch of countries that are important in global manufacturing supply chains, and of course the top kind of different elements that investors think about, like market opportunity, FDI policy, labour market, infrastructure, all these sorts of things. The things coloured in blue are generally more attractive. Here's India, kind of two-thirds of the way down the list. So places where supply chains are looking to move to. Of course, cost comes into this as well. Singapore's got a great business environment. It's also a very expensive place to do business, although digitization is reducing the impact of labour costs. So South and Southeast Asia, when you look at the balance of where's got a good business environment and where's got an attractive cost picture, that's where there's a lot of positivity. And we could even say that Southeast Asia, it's kind of winning from the US-China. It's the winner of the US-China trade war because it's getting more investment from both sides. The war in Ukraine is changing supply chains a lot. I mean, here's an example of one for metals. So this is an average of aluminium, copper, nickel, tin, and zinc, which Russia and Ukraine are big exporters of. Those countries that are coloured in there have a large amount of their metal supply coming from Russia. Exactly what the countries are, not that important per se, but we've been doing this for a whole lot of different commodities, and there's a whole lot of vulnerabilities, and these countries are having to reevaluate and reform their supply chains to source from new locations. And now with geopolitical risk being higher up people's kind of psychological agenda and boards talking more about it, who your political friends are becomes important as well. Where can I get this stuff from? What's the cost of getting it? And then how reliable is it? Like if my government has a fight with somebody, am I going to be cut off from my critical suppliers? This is a similar one for grain. And of course, food security is now a huge global issue with food prices being very, very high. In light blue there are the big food exporters. But Ukraine and Russia are two of the world's top 10 wheat exporters, and so those countries in yellow, orange, and dark red are the ones that are facing the biggest disruptions to their food stocks. Although food is generally priced globally, wheat's a global commodity, so even producers like India are still subject to those higher global prices. There's a lot of opportunities coming in the services sector. So when people talk about trade, of course, they tend to think about physical trade and goods and container ships and that kind of stuff. But a lot of trade these days is in services, and some of it's sort of lower tech, like tourism or education type services. Increasingly, there's a lot of high tech service trade, and India is one of the key countries in the international services trade in the tech sector. So there's going to be some opportunities as Asia opens up. It's been the slowest to recover from COVID, and the greater need for diversification and localization playing out across the region as well. Some things we're watching for, so in IT, we're focused on the risk from data regulation and potential tax and other regulatory moves against the digital sector. In finance, we're looking at volatility in markets as interest rates continue to rise and how the higher cost of capital is going to have an impact. Across the region, these are some of the key digital trends that we are looking at: automotive, telecoms, healthcare, some of the sectors that we see being highly influenced by developments in the technology area. Future growth is going to be in some key emerging technologies. So we think that cloud and Internet of Things are two areas that are going to see a lot of investment. So will sustainability and the green transition. But we're going to see governments regulating more as well. Partly because tech's a bigger part of the economy. They're worried about their tax base, but they're also worried about the geopolitical and the risk elements of that. Tech and sustainability are going to be two trends we're going to continue to hear a lot about. We've got digital transformation and we have a green transformation, both happening. Tech's got a critical role in delivering that green transformation at an affordable cost. And another key area where tech is going to have a big role to play is around workforces. This is a chart showing workforce growth in different places around the world. There's India in kind of mid blue. Starts off with very fast demographic growth over on the left-hand side back in the 2000s, but you'll see it falling rapidly, as it is in many other countries as well, and even places like the Philippines that have had historically quite fast-changing labour markets. The workforce growth is shrinking as populations age and birth rates fall, and even in a place like India, which has one of the world's youngest populations, the birth rates are going down very close to replacement rate. It won't be that long until India's workforce growth is all about life expectancy increasing and not about new workers coming into the workforce. And so as labour gets scarcer, then some of these labour-saving technologies are going to become more important. I was going to try and leave 5 minutes for questions. I've left 90 seconds, so maybe I can squeeze in one or two. If you want to chuck your hand up, if anyone wants to ask something or make a comment, then we can send one of the microphones around to you. Yeah, down the front. You can get in quick, and then you get your question before the clock runs out.
Thank you for a fascinating talk. When you spoke about local supply chains, there are some supply chains which are global. When we talk about economies of nations thriving, there are, of course, big tech companies which are global. Mm-hmm. And then there is that vast section of the small middle enterprise which actually boosts the economy. So is local supply chains actually, from a judgmental lens, is it good? Is it bad? Because countries could continue to prosper even with local supply chains as long as, I understand commodities and metals is a little bit of a challenge, but...
Yeah. Big firms are more productive than small firms. That's a general rule. So if we look at, output per worker or output per unit of capital invested, typically large firms are more productive than SMEs. Now, there's an exception to that, which is the digital startup space, right? Now, of course, there you have some extremely high rates of productivity growth, but then also companies that end up going to nothing. So you need to look through the average there. Sort of the splinter net or the movement of, not having a giant global ecosystem and having like multiple smaller supply chains. Look, it is more costly overall. Yeah, so you don't get economies of scale. And in digital, usually, often in digital stuff, the marginal cost is close to zero, right? You want to serve extra customers well, it doesn't cost you much more if there's just an extra download or an extra online subscription. So more smaller firms reduces productivity, but what it does gain you is more resilience from risk. And so, I think, 2010, 2018 kind of period, the world was pretty stable. And certainly nothing like the amount of big disasters that we've seen over the last 2 years, right? So many different things. And so the cost of that concentration in small numbers of companies is high risk exposure. And so splitting up stuff does lower productivity overall, but it gives you a benefit because then when you have a negative shock, you're more resilient to it because you've got more diversity in the ecosystem. Yeah.
Hello. Hi. Here. Yeah. So I saw a slide where you're focusing more on the localization. You're stressing up on that.
Yeah.
And I believe that's exactly opposite what we have been trying to do, right? Talking about globalization, pushing more global. So can you explain what is that localization means? Is it something related to data, something related to production, something related to workforce? How do you look at it?
Yeah. So it is a bit related to data. So, data privacy rules and this kind of stuff. And we've seen the global reach, say, of the EU's GDPR regulations, which, even in transactions between firms in countries that neither of which are covered, they typically will want to deal with it. And so that's one element where, countries impose different regulations. The EU is big enough that people then just kind of adopt it globally because there's no downside to it in a way. It's a bit of a hassle, but you can use it in Indonesia and it doesn't really, harm your business. The challenge is going to be in the US-China tech worlds because they're setting it up so that they're incompatible with each other, right? So it's very hard to operate cloud services across that border already, right? Because everyone's got their own requirements about data being held within their borders and not being shared. Yet both the US and China require their tech companies to share all their data with their home governments. And so it's already impossible in cloud to kind of operate smoothly across those two ecosystems. That'll be true in more and more kind of areas of tech as more things get kind of controversial. So that's one area, and then generally, regulation is going to increase in the sector, and so I think as we look ahead into how tech is going to be working, we are going to be seeing sort of different ecosystems requiring different sets of systems. Now that's costly, that's kind of a shame, but if you're in that industry, you have to think, I guess, be conscious of what are the bilateral kind of tensions and what are the international geopolitical events that could affect you. And Ukraine is a great example. Everyone's now watching what's happened in Ukraine and with Russia. The sanctions against Russia by the West were much harsher than expected. I don't think many people thought the West would actually do it. People thought the appetite of Western kind of voters to deal with costs for standing up for democracy or something was very low. It's turned out to be a lot higher than expected. And the sanctions against Russia have been stronger and the West has been more united in them. Now everyone's like, oh, so that might happen with Taiwan actually, mightn't it, right? So if China did something in Taiwan, now we probably would expect to see a big sanctions impact. And China is much more integrated in global supply chains than Russia is. And Russia's a commodity seller. China is just, it's just so much more integrated. And so is Taiwan, actually, in the tech sector. And so now people looking at their tech supply chains and worried about that political risk. What happens to me, my company, my supply chains, if China invades Taiwan and everything in China is subject to sanctions? Or I can't get access to Taiwanese semiconductors, or I can't get access to my assembly plants in China. Now, that's very top of mind, and so that's driving some of that localization as well. I've run out of time, I think, so there's a few more hands up, so please come and try and grab me afterwards. But thanks so much for being a great audience and some great questions.
Hi, what an amazing session from Simon Baptist. The data that he's shared with us is really eye-opening in many ways. And while we've been aware of things like the Ukraine war and inflation, bringing it all together and presenting a picture over the next few years, 5 years, 10 years, is pretty amazing, I thought.
Yeah. And I think what struck me was that, of course, tech companies are going to rule. And, the companies that drive the future of technologies are going to drive, future geopolitics. But things to watch out for are really, be worried about your data, who owns and who holds data, and also security of your data.
Absolutely. In fact, the 5 key trends I took away were localized supply chains. And Simon did a very nice job at the end, how he showed with Russia and Ukraine war, what's happened, and how people are looking at the China-Taiwan equation and what that means, and the need to localize supply chains. And that came out as a really, really big trend. The others I picked up were commodities and food insecurity. I picked up commodities, but food insecurity to this level is quite an eye-opener. And then the others were around capital
Southeast
reallocation.
Asia, gaining overall from the supply chain.
Correct.
Yeah.
In fact, I think somewhere India doesn't seem to be in as bad a place as one would have thought.
Yeah.
Having said that, global GDP is going to come down from 3.9 to 2.7%. And I think the future is uncertain in many ways.
Yeah, and but the recession is going to hit in pockets, and not probably as bad globally as we thought it would.
Yeah, I mean, at least globally, there won't be a recession. So that's comforting.
Yeah.
There will be a slowdown. Interest rates will go up. And we'll have to keep watching. But I think this data was so intense. It'll take us some time to digest it and figure out what it means for all of us.
Yeah, and I think, we just start needing to take measures so that we can combat it.
Absolutely. I think we all have work to do in our backyards, whether it's governments, whether it's companies and how they want to manage it, supply chains, commodities, capital reallocation, lots and lots of things to think about.